Hello and welcome to another update video about Cardano. In this video, we're going to take a quick look at the Bitcoin price and the Cardano price. What we do, we start with Bitcoin, then we take a look at the Cardano price, what it's doing. We're taking a look at indicators on different time frames. After that, for everybody who's interested, we're going to do a little bit of a deeper dive into the Elliott Waves for Cardano and what they could predict going forward. You know, they are not a crystal ball or anything, but they are just providing more orientation and are another indicator. And you know, they can be wrong, the wave counts can be wrong and things like that, but it's just another indicator, and it can be very, very helpful. And a lot of you guys, I know, are interested. One word to say about that: a lot of people have asked me to do Elliott Wave counts or presentations for other cryptos as well. I can't do that at the moment. It's just, you know, it's just a time. It takes a long time to get these right. I don't want to give you, let's say, low quality content. So I need to focus on one thing. I can't do all of them. Maybe, you know, if I go full-time, let's say full-time YouTube and things like that, at some point I will be able to do that. You can all help me with that by commenting, subscribing, and leaving a like. And then at some point, if I have more time, because I don't have to go to a 10-hour corporate job, which is quite stressful in itself, I can also focus more on that stuff. So hopefully that, you know, you guys understand and appreciate. And also you can help me by considering to become a channel member. You can find a link in the video description as well, and you can join next to the subscribe button, and there you get more frequent updates via Telegram and Discord. You get a live stream, and you well, there are more things coming up anyway, and we already have, I think, 12 or 13 channel members. I'll do a shout out in the next video for all of you guys. And yeah, it's growing day after day, and that's great. Still very early days, very much in the beginning. Only started that on the weekend, the membership, and great to see that people are signing up and helping me, and hopefully you guys get quality service back as well, as far as I can provide it. Right, let's start with Bitcoin. Bitcoin, just a brief look at Bitcoin on the daily. We made an attempt to break through the 44,000, have failed so far. It is looking better. You know, not on the daily, you can't see much. So let's go down to the 1 hour chart. On the 1 hour chart, you can clearly see that we have been making, we've broke above that descending trend line again, which is really nice. Then since then, we've made higher highs and also higher lows. We have even managed to make a higher, yeah, let's call it a higher swing high. So we've come above that high here. But honestly, or actually, we haven't actually, because that candle actually hasn't closed above it. So that 1 hour candle has not actually generated a higher high, but we have touched the 44,000 level, obviously failed, dropped off. And I did say in my video earlier that it is possible that we haven't seen the low yet. To really make sure that we get to the upside now, we need to get above 44,000 for Bitcoin. We need to make higher highs. We haven't done that yet. Yes, from here to there, yes, but that is an important swing high here. And here we made another one, and since then we've actually made lower highs. You can see that. And here now, yes, we've made a higher high, but didn't get above that one. So you know, now we're going down again. Could possibly go back to that 41,700 trend line. If we drop below that, you know, that could then really take us to that 38,500, which I gave you as price target, which is the 0.618 Fibonacci retracement level. But let's go to Cardano, which is what you guys are all here for, and we go straight into the hourly because we have a little bit more detail here. And again, well, I'm still on the Bitcoin chart, I just realized. So let's just go to the Cardano chart briefly, quickly. So there we are. This is the Cardano chart, the hourly. And yeah, what we can see, obviously we made lower lows. If we connect those wicks here, we made lower lows. We haven't really made another high, very similar to Bitcoin. We've come here, had a lot of buyer support, I must say that. A long lower wick here, and since then we've really come up pretty much like in a V shape, made higher highs, made higher lows. We can see that when we zoom in, but we haven't managed to get above that. Well, actually, we have managed to get above that level here, that neckline at 218. We're currently above that, and that's looking quite good actually, because we have come above that 218. You can clearly see that that was a support level here. I actually need to move that up a little bit, but it doesn't matter now. move it up a little bit, and then we actually moved above it, retested it, and moved then up from there, but found some resistance at 225, bounced off that, so 225 certainly found some resistance here, and this seems to be a level we need to get through. But then also we have that 230 or 231 level that I think is very critical, because this is really, if we get above that level, we are sort of in that range here, that and above that level that formed the support for that descending triangle, which eventually led to the breakdown here, to the move to the downside. So and you know what I always find interesting, people saying about China and things like that, but this was a very clear descending triangle, and there was a breakout forming already. And to be honest, and I did say it in a previous video, those China news, they might have been the final catalyst, but that was nothing new. You know, whatever was happening in China with you know, with all these news that were coming up in the last couple of days, you know, this was well known to people who were in the, let's call it, in the markets. And you know, I checked it, and there were videos about it from 2012 talking about the same things with Evergrande, and this was no surprise really for anybody who was in the market. So that this suddenly comes up, this was purely, in my view, still again just a catalyst, and it is what people are then looking for after such a price drop. People are looking for, you know, what could have been the reason, which is just natural, which is in the human nature, that people always try to find fundamental reasons and understandings, and why did the price drop now. But essentially this was already, you know, not clearly predicting, of course not, because you never know, but this was already forming that breakout pattern to the downside. And it's just when a drop like that happens, people always look for the fundamental reasons. But anyway, we are now on our way back up, but we bounced off that 225 line. We could come down once more. I did say it earlier today. We could actually come down to hit that descending trend line as well, which would then potentially really mean that we've hit the 185 target. However, it's looking, let's call it, more bullish or less bearish, definitely, because we see a slowing down of that downtrend. You know, we came up quite strongly, and since then we've really seen increasing volatility here, but also an increasing RSI, which means that, you know, the downtrend is just slowing down, and momentum is building up to the upside again. So buyers are getting stronger again, sellers getting weaker. And let's take a final look at the Elliott Waves, which a lot of you guys are interested in, I know that. So just to explain, to make it not too complicated, I think we are still in that wave C correction here. So from that all-time high at $3.10, which was the wave 5 completion here, which marked a wave 5 completion in brackets here, we came down to wave A correction, came up in the wave B correction, and in a final wave C correction down here. I gave you a price target of 185 before, when we were up here. I think that's when I started to introduce the Elliott Waves on this channel. Bear in mind, I only do this part-time. I can get it wrong, of course. I've used them a lot in the past for trading. I think I understand quite a bit about them, but you know, I'm not a full-time Elliott Wave analyst, so please bear that in mind. But I spent a lot of time putting this together, and I'm quite confident we are in that wave C correction here at the moment. And if we see that impulsive move to the upside forming, that just means that we are starting a new wave 1. After the wave C correction, you then get that wave 1 on a smaller scale, but on the primary scale, because with Elliott Waves you get waves within waves. We still are in that impulsive move to the upside, wave 3, which actually, and that cycle actually started in May. So from down here we formed a primary wave 1, a wave 2, and we are still in that main or primary wave 3. We haven't completed that yet. Some people might think, you know, we might have completed it up here, but we didn't, because we came down too far. And that was not a wave 4, because we touched the price area of that wave 1, so not a valid wave 4, which means we are still in that wave 3. Hopefully that makes sense. Try to keep it very simple, very easy to understand, but this can become quite complex and confusing as soon as you introduce different time frames, different scales, because with Elliott Wave theory or method, you have different time frames. You've got, you know, you've got grand cycles, you've got primary cycles, you've got minor cycles and things like that. And that's where it gets complicated. So I try to keep it to the minimum complexity here. But I still think, you know, as long as we haven't seen that impulsive move to the upside yet, which I can't see yet. Yes, there is an attempt here at the moment. So we need to see how that is playing out. But yeah, we came definitely into that target rectangle here in that box, and we came very close to the price target of 185, which is the 0.618 Fibonacci retracement level. And this is typical for that wave C correction. Now, you know, I did say in a previous video that box is there because it is between the 0.5 Fibonacci retracement level and the 0.382 or 0.618, sorry. I've got it reversed. Again, just need to say that again because I use the same tool also for the extension levels up here. It's just easier than I have it reversed because of that. But essentially, you just need to swap it with the 0.618, and it's the same value essentially. So yeah, we came already into that target box, so I'm happy with that already. It might be we come down once more and get closer to the 185. I think we came already to 189. And from there, you know, you can expect then at some point, if that C correction is over now and we see a move to the upside, then we will get in that move 3 or in that finalization of that wave 3, we'll get to a price target of at least 450, which is the 1.618 Fibonacci extension level, which is typical and at least expected for a wave 3 move to the upside. Wave 3 waves are normally the longest waves, at least they are not the shortest waves. And because of that, they oftentimes overshoot the target of the 1.618 extension level, which means we can see prices higher than 450. And where it gets complex and people might get a bit confused is that wave 5 finalization here on where we had $3.10, that is also the beginning of a new wave 1. And that C correction here forms part of a wave 2 correction as well. And then within that primary wave 3, we now have the beginning of another wave 3. So it is getting a bit complex when you talk about all these different layers, which is why I don't want to get into the detail here too much. But as I said, we could come down once more closer to the 185. That's my, you know, that is still part of that scenario. Or even go down a little bit lower. But then we will move to the upside from here to that wave 3. At least that is the main scenario at the moment. If we of course drop even lower, then at some point you might need to do, or I will have to do a recount because it could be wrong. But as long as that is currently, you know, that is still valid of course at the moment. And yeah, I spent a bit of time on that. Hopefully that makes sense to you. I think it's good news that if that C is over, we are continuing that move to the primary wave 3. So it might be that we've seen the first half of that wave 3, and now we are going to see that second half of that primary wave 3, after which we will then see another wave 4, primary wave 4, and a primary wave 5. And after that, we will see a primary wave ABC correction. And, you know, you could say maybe that wave 4 will be the crypto winter or that ABC correction. Don't know yet, we'll see. And as soon as we know where the price C is finished, then we can calculate price targets for that primary wave 4 and 5. Hopefully that was not too complicated. Hope you liked the video. If you did, please smash the like button. And if you want to follow me on this crypto journey, then please subscribe. Thanks a lot for watching and see you in the next video. Bye bye.